Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome back to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a massive welcome to the community. We cannot wait to get stuck into today's episode. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. This winter series brings back one of our favourite content formats where we deep dive on a company. We'll do 15, 20 minutes on what the company is, and then we'll get an expert in to help us understand how we analyze it as an investment option. The company we're doing today is one that is front of mind for a lot of investors and has made a lot of small cap investors very happy recently. That's Droneshield.
That's right. ASX ticker is DRO. And our expert joining us today is none other than Andrew Page, founder of strawman.com. Now, before we jump into it, a huge thank you to Superhero for proudly supporting this winter series. Superhero is Australia's best value online share trading platform, as awarded by Money Magazine 3 years running. They're feature-packed for a fraction of the cost, including $2 brokerage. Get access to award-winning features and amazing value from the get-go. Get invested. Trade for $2 with Superhero.
It is worth noting that Superhero does not provide financial advice, and you should consider whether their product is right for you. $2 brokerage is for trades up to $20,000 and in the relevant currency. T's and C's do apply, and you can read them or download the Superhero app at superhero.com.au.
All right, where do we want to start?
Let's not start with the company itself, but let's start with what's happening around the world, because warfare has changed, and nowhere is that clearer than in Ukraine, although we actually also saw it in the Middle East recently as well. Warfare is more and more drone-based.
Drone-fare.
And this isn't the drones of a previous generation where Obama and Bush were using them in the Middle East, giant drones launching Hellfire missiles from the sky. This is tiny little drones similar to what you could buy at like a hobby shop or an electronics shop, doing surveillance and actually like offensive operations as well. Here's just some of the drone warfare that we're seeing. So October 13, 2022, in Ukraine, in the Donetsk region, we saw the first recorded instance of unarmed drone-on-drone combat. In May 2023, we had the first surrender to a drone, or really via a drone. A Russian conscript surrendered to a drone.
Sorry, unarmed drone-on-drone combat would be so boring.
It would be like crashing into each other. The Iranian attack on Israel was the largest drone attack in history. They're just becoming more and more prevalent. But the really notable thing about this, and why it's such a change in warfare, is the cost, because drones are cheap. An estimate we found that some of the drones that are being used by the Russians cost about $20,000, whereas a missile is $500,000 or more each. So it's just a massive step down in cost. But what isn't a step down in cost is the cost to defend drones. So the Russians are using $20,000 drones, but an estimate that in 1 month, from the 13th of September to the 17th of October, it was estimated that Ukraine had to spend $28 million to defend against drone attacks. And that is the important context for the company that we're talking about today, because they are in the right place at the right time, and they're really riding this tailwind. Drones are cheap, they're easy to make, they're incredibly effective, but they're expensive to defend against. And that's where Droneshield comes in.
Yeah, so Droneshield, a company founded in Virginia in 2014, 2 ex-military guys.
Yeah, 2 US military guys. Then it was bought by private equity, and they decided they wanted to list in Australia because Australia is, at that time, was pitching itself as good for small, nimble startups.
Yes.
I guess jury's out. And they brought in an I guess, a professional CEO to help it list and run it.
Yeah. So it listed in 2016 in Australia and has had some pretty phenomenal growth since. So yeah, they are in drone security, or counter drone technology is what they specialize in. From the mouth of the CEO, they are an Australian-US defense tech AI company developing and providing AI-based solutions for counter UAS and electronic warfare. In other words, they develop and sell hardware and software to defend against drones. Neutralize, detect, you name it, they're involved in it.
Yeah. We've mentioned the CEO a couple of times. His name's Oleg Vornik. He actually was born in Russia and fled Russia. He's actually now on Putin's sanction list.
Yes.
Because... I guess because he's making anti-drone technology.
He's making warfare harder for them. And just to close out the company in a bit of a nutshell, their target customers obviously at the moment are military and governments, but then their functionality can extend beyond just defense from a warfare point of view, airports, prisons, basically anyone who wants to protect themselves against unwanted drones, and we'll get to that a little bit later. But that's kind of it in a nutshell.
So I think let's pause here and just really explain what their products are, because they're literally they're like gun-shaped.
They look like something you would have in the game Halo.
Yeah, they're like futuristic guns that don't shoot bullets, but instead shoot like electromagnetic radiation or like other things that block signals, which disrupts drones.
Yes.
Yeah.
So that's part of so they have kind of three product areas. That's in countermeasures, where they have what are called drone guns, which is, as Ren said, you're essentially pointing it up to the sky, you're a soldier or whoever it may be at the airport, wanting to prison, shooting some form of, radio wave disruptor into the sky at these drones. Yeah. So that's the countermeasure. And then they also have detection and identification systems. So the first detection systems, radar, radio frequency signals to actually identify drones. And then they have systems that help to actually identify good drone versus bad drone, authorized versus unauthorized. At the end of the day, you don't want to be shooting down your own drones if you need them in.
True, yeah. So you can't just jam
them up there.
You can't just jam like all electromagnetic signals.
Otherwise everything falls out of the sky.
Yeah, that's interesting.
Yeah.
So let's talk about it as a business, and I guess the addressable market is obviously large and growing. The estimate we found was $10 billion as a worldwide addressable market, but I reckon that if you looked at an estimate from 2022 compared to 2024, wildly different, just because the paradigm is shifting.
Growth, yeah.
Obviously, it's growing. Obviously, current geopolitical tension is good for defense manufacturers, and this is a defense manufacturer. It may not be the size or the scale of RTX or Lockheed, but it's driven by the same forces.
Yeah.
The company reports that their sales pipeline is worth more than $500 million. And that's notable because in 2023, it did $16 million in revenue. In 2022, it did $16 million. In 2023, it did $55 million. Massive growth. But if it's got a sales pipeline worth more than $500 million, you can see that that'll keep it going for a little while. It reports that $500 million sales pipeline is across 90 qualified projects at different stages with various government customers, and in $27 million of that is currently being fulfilled.
Yeah, and so I think the important thing as well, if you're looking at the addressable market, is 75% of their revenue comes from defense at the moment. And so when you're looking at how they're pitching the next few years, they see huge opportunity in civilian things. So like airports is a massive opportunity.
I call bullshit.
What do you mean?
I reckon that 75 mix won't shift massively.
I mean, it's just an opportunity, though.
Yeah.
So what if it doesn't shift? But
it's just like the Australian government has priority over Sydney Airport.
Well, why can't they do both?
Because they have their biggest constraint would be capacity, would be manufacturing capacity.
Yeah, I don't think they're saying that. Anyway, you know what I'm saying. You can tell Oleg it's bullshit.
Yeah.
But look, there's opportunity beyond defense, I think, is the important part when looking at something like this. Critical infrastructure. Prisons is one that they always mention, and I guess it's because people are dropping in illicit substances and all sorts of things from drones from the top. So stadiums, so it's a fascinating company and one that has really been able to solidify pretty decent market share.
So looking at the financials, it's a pretty incredible story, as I sort of touched on before. $55 million up from $16 million the year before, up from 10 the year before that, up from 5 the year before that. So if people are doing their maths in their head, that's an above 50% growth rate each of those years.
Wow.
It's profitable. It was profitable last year, 9.3 million. It wasn't profitable any year before that. The growth rate is pretty incredible. The question is how fast it will, like what comes next. But as I said earlier, it feels like the only constraint is manufacturing processes. I think we've been pretty positive about this company so far. My big question becomes the future, and in particular, the competitive future, because there's a reason that there are only a few giant defense contractors. And when they turn their attention to something, they do it very effectively and at a scale, and with, at least in America, cozy government relationships that lead to contracts that make it very hard to break into. And so this probably hasn't been a strategic priority for Raytheon or Lockheed or General Dynamics or any of the other big guys. And the question becomes, as the nature of warfare changes, this focus will change. It also wouldn't surprise me if one of them just buy it.
Yeah, you would think that they'd be a good target acquisition. I would also be surprised if those big guys don't have their eye on this. Like, they would definitely have a finger in the pie. They'd be completely naive for them to be like, oh, whoops, drones came out of nowhere. So, like, I think I would be surprised if this isn't already something that they're doing, you know?
It's just like the business opportunity here hasn't been massive until recently.
True.
Like how much money is there in it?
True.
Yeah. These guys make $35 million strike fighters. Like, each strike fighter is $35 million. Each Raytheon missile is probably, I don't know, over $1 million.
Yeah. I see what you're saying.
This whole company was worth...
Yeah. Next to nothing.
This company was worth less than one Lockheed F-35.
Yeah.
But that's changing. And so the question is, how does the industry change around it?
Yeah.
The other big question, and would have to speak to Oleg about this because we're not going to know from the outside looking in, their technology works on drones now, but the nature of warfare is constant move and counter move. And if their technology works, then all of a sudden the drone manufacturers are going to have their counter move. And so the technology has to continue to work on each new generation of drones.
Yeah.
And then that's just a technological arms race that, as I said, we're not going to know. And any investor who tells you they're going to know isn't really going to know what, like, Russian drone manufacturers are doing. But that's a question.
Well, speaking of the future, they have recently gone into a trading halt because they're trying to capitalize on the growth that they've been experiencing. They're raising $70 million to essentially keep up with demand. So keep up with their defense contract pipeline and deploy some of it into, really inventory. So this is a manufacturing game by the sound of it. How can they keep up? And they also want to put some of that money towards artificial intelligence and machine learning. If they actually have seen incredible demand for that 70 million cap raise, given the growth. I think the stock's up about 140% year to date, 300% since listing in 2016. So they are seeking approval from shareholders to do an additional 30 million. So potentially 100 million raised, which will be handy on their balance sheet.
Yeah. To give you some context, 2 years ago, it was trading at about 20 cents.
Yeah.
It's now just shy of $1.
Yeah. So they're doing the cap raising at 80 cents, which is nice for those shareholders that can get that. But yeah, it's come off a bit, but it's done incredibly well. Yeah.
So look, as we get to the second part of this episode and our conversation, I want to leave you with one interesting fact to sort of give you a sense of where Droneshield sits in the priorities of the Ukrainian government and sort of like their importance.
Yep.
October 2023, Australia gave Ukraine a $20 million aid package.
20 million?
Yeah.
That's it?
That's it.
What?
Kind of pales in comparison to the 60 bill that's going from the US.
Whoa.
But of that 20 million aid package, 10.4 million was Droneshield equipment.
Wow.
Yeah. So there's not a lot that we can contribute.
Wait, we gave 10 million of our own Droneshield equipment, is what you're saying?
No, so all these aid packages are really just...
Like go and spend on this.
No, it's not even that. It's like the US government gives a $60 billion aid package, but really what they do is they take $60 billion from the US government coffers and pay US defense contractors who then deliver the weapons to who need it.
Yeah.
And so like in this instance, it would have just been like the Australian government bought $10.4 billion worth of Droneshield equipment for
Send
Ukraine and shipped it over. Yeah.
Wow. So 50% of it.
Yeah.
Wow.
So it's literally being used today. Like this isn't theoretical. This is in use. It's a pretty incredible story. We claim it as Australian. I think it's a stretch to call it Australian. I mean, it's an Australian team working on it, so that's fair. But
it's pretty Aussie.
It was started by 2 US military guys in the US.
That's all right. Pretty Aussie.
But Australian investors have certainly benefited from being closer to it.
Yeah, it's definitely going on my watch list. I find this pretty interesting.
Nice.
Yeah.
Now, Equity Mates, we're just going to jump in here quickly because after we recorded this episode, more news has broken about Droneshield. Mm-hmm. They've just been awarded a $5.7 million Aussie dollar contract from the US government, or a US government customer is how it was phrased. Obviously, shares ripped on that news. So it's worth just noting that they keep getting contracts.
Evolving beast, yes.
Anyway, this is going to make more sense as you listen to this episode, but I think we just wanted to contextualize that more news has broken since we recorded this episode.
All right, well, we're going to take a quick break, but before we do, a big thanks to Superhero for supporting the winter series. At Equity Mates, we hate fees because they eat away at your returns. So keeping brokerage as low as possible is important. With Superhero, you can trade ASX and Wall Street stocks and ETFs for just $2 brokerage. Plus, take advantage of premium features like real-time FX, allowing you to invest instantly with PayID without the waiting game or extra fees.
Superhero is Australia's best value online share trading platform, as awarded by Money Magazine 3 years running. Get invested, trade for $2 with Superhero today.
$2 brokerage is for trades up to $20,000 and in the relevant currency. T's and C's do apply, and you can read them or download the Superhero app at superhero.com.au.
Stick around because after the break, we're going to be joined by founder and managing director at strawman.com, Andrew Page.
Welcome back to Equity Mates. We're doing a deep dive on Droneshield, and it is our pleasure to welcome back to Equity Mates founder and managing director at strawman.com, Andrew Page. Andrew, welcome.
Hey guys, you forgot guest of the year, but we'll let that one slide.
Well,
he's back to defend his title.
He's back to defend
the 2023 guest of the year, Andrew Page.
Sure.
I got a coffee mug made up and everything, so I'm not letting go.
Well, we actually have a trophy made up that we haven't got to you yet.
Oh,
so
what?
True.
That's our job for 2024.
Yeah. It's actually quite nice. It's sitting on our shelf. If people watch our YouTube, they'll actually see it in the back of the YouTube clips because. But we'll get it to you somehow,
dude,
Andrew.
it's got to be on. Look, with all due respect, that should be on my shelf, right? Like I'm proud of that accomplishment.
Yeah, well, we would say you've got to come and collect it, but we've just found out you're now in the Blue Mountains, so you're moving further and further away from us. Yeah. But look, we're not here to relive past glories in your guest of the year, but we're here to talk about a company that seems to be enjoying some pretty current glories. It seems to certainly be where the world is going and where the world of warfare is going, and that's Droneshield. Now, Bryce and I have spoken a little bit about the business before the break, but what we like to do in these episodes is get an expert in to help us now analyze that business as an investment option. So let's start with how you analyze a company like this. When it comes to Droneshield, what are the metrics that matter? What are you looking for? And probably just as importantly, what doesn't matter when analysing a business like this?
Look, I would say it matters a lot, but it's not the place to start is the share price, which I think is where everyone starts, particularly when you've got something that's, let's face it, it's a little bit sexy. Not that war is sexy in any way, shape or form, but if you've seen the images of their tech, it's pretty cool, right? Like it's it's a bit Starship Troopers kind of stuff. So you've got this sort of sexy bleeding edge technology and a share price that's going to the moon. And that's just going to attract a lot of hot retail money. And it's very easy to sort of get sucked in with all of that stuff. So I'm the last person to say that share price doesn't matter. It matters a hell of a lot when you're trying to sort of square it up and value it, but it's not where you start. And we've also got to be careful of a bit of hindsight bias here as well, because as of 2023, I mean, their revenue has just been going from strength to strength, and they've now delivered a net profit as well, which is really great. But for the longest time, this thing, well, it's only a 10-year-old company, which is, you got to pinch yourself sometimes, but it listed in 2016 and it didn't have any sales for the first few years. All it had, and like you guys know this, right? There's how many companies are on the ASX that have this really shiny pitch deck, and, you know, we've got a $10 billion addressable market, and if only we can get, 1%, we'll make a squillion dollars. But there were no financials to sort of base it on at that point. It was really just, it's an investment. Well, it's not even an investment. It's kind of a speculation that their technology will be successful, that, like, in terms of the technology itself, but then commercially successful. And it'll be done so in a way where shareholders actually see a good return. So the capital structure is managed well, et cetera. So it was for those that have been on since the early days, like, congratulations, but there was a huge amount of luck involved. We are now at a different point where there are financials, and they started delivering some revenues. Oh gosh, when was it? Probably 2018, 2019, when things started to sort of really take off. And really in the last 12 to 24 months, it changes the nature of the business. It goes from something that, oh yeah, this sounds good, to, well, people are actually buying it, right? And that is the biggest tell. For a lot of companies where they're consumer facing, like, everyone knows what an iPhone is, what the value proposition is. You can make a judgment of the product just through your own personal experience. None of us are buying Droneshield technology, right? And so the only signal you've got there is like, well, whoever the customers are, and there's military and stadiums and port, etc., they're buying it, and more of them are buying it, and they're buying more of it, and that is a very good tell. And then particularly in FY23, as I said, there's not just sales, but there's revenue, there's cash flows, there's a strong balance sheet. So now, if you're a little bit fundamentally inclined like I am, you've got something to sort of say that there's a real business here. And I can see that there is momentum, not in the share price, but in the sales and in the trajectory. There's some really important sort of strategic elements to this, such as they signed a NATO framework agreement. They've got some big contracts with the US military. These are things that are a little bit more tangible than just a good story. And I think that's where, for me, it starts to get really interesting.
Yeah, well, I think it's had revenue growth of, I think, what was it, 2022, they did 17 million. In 2023, they've done 55 million. Yeah. So that's like 200 plus %.
And in the most recent quarter of the current year, they have 10x'd what they did in the previous corresponding period. So they've not just, not just growing, but they've hit that lovely inflection point. It's that kind of gradually then suddenly moment. So yeah, things are going really well for them.
I mean, for me, and maybe we're getting ahead of ourselves, but it does make me think, is this a company of the moment? I think, like the war in Ukraine is certainly put the spotlight on drone warfare and the spotlight on Droneshield. But the question is this a paradigm shift, and do you extrapolate those growth rates out, or is this an anomaly and growth rates sort of return to the mean once we get through the Eastern European conflict?
Yeah, it's such a great...
I don't expect you to have an answer on that, but do you have thoughts on that?
Yeah, I mean, you have to have thoughts on it, right? Because that's a really super important question. Actually, if you look at, it's not called EOS anymore, whatever they've changed their name to. There's a range of military-related companies that are out there. Not many on the ASX, but a lot more globally. And they tend to, besides some very notable exceptions, they tend to be not great businesses, because they can all of a sudden get this huge order out of nowhere from a government, which is great, but then delivering on that order and fulfilling that order, actually, you've got to spend money before you can make it. You might have to ramp up your production, your manufacturing, everything like that, and then it just doesn't repeat the next day. and then you sort of left there, so very, very lumpy, huge, long sales pipelines, or just complete disruption where it turns out that the battlefield hardware is going in a different direction. So yeah, I think you do have to have a view on it. I'm of the view that drone warfare isn't going away. Ukraine has shown, I think, pretty decisively just how critical they are on the battlefield. Not just in terms of their effectiveness, but in terms of their cost effectiveness too. I really cringe using these words effectiveness in this kind of context, but you know what I mean. So I don't think it is going away. Then the other question is, well, there's one thing for the technology to be around, but who's to say that this is the company that's going to sort of capture a good chunk of the value? A lot of companies are working on this technology. And I think you can have some confidence that they're in a good spot to continue that trend. One, because we're very early on in the adoption curve for militaries. And as I said, it's not just them. It's prisons, it's ports, it's stadiums, it's these other things. There is a huge addressable market there. And importantly, these, like I mentioned before, the NATO framework agreement, you don't just knock on the door of NATO or the US or Ukraine and say, hey, we've got some drones. Are you interested? The due diligence that these counterparties go through is insanely detailed. And they're not just looking at the technology, which has to fit into a whole other existing technology stack. You need all your gear to sort of talk to each other. But you also want to make sure that they themselves are dealing with a trusted third party that aren't going to sort of divulge any important secrets. So it's very hard just to get to the table. Droneshield, and Oleg, the CEO, has really made the point to us when he's spoken to our members before, is that this is huge, because once you've got these agreements in place, once there's order numbers, once you're in the system, if a frontline commander needs a bit more gear, they can pick up the phone or dial up to a website and make that happen very quickly because all of the T's have been crossed, the I's have been dotted on all of the preliminary work for that. So they're on the inside of the tent now. So I'll summarize. So a big tailwind. I think it's going to last. They're in a very good spot where others might have some really interesting technology. They've yet to overcome a lot of those procedural sort of hurdles, and Droneshield is there. And hopefully, if things go well, they will take this revenue and this success, and they will prudently reinvest that into some R&D to continue strengthening the products, where it just gets better and better and better, and harder for others to compete who might not have the revenue and the internal cash flows to sort of fund their development and growth. So nothing's guaranteed, but they've gone from highly, highly speculative to a very real business with very real traction and a pretty attractive runway. Oh, and the final thing I'll mention is the sales order book just continues to expand. I think it's something like a 500 million order book at this, a pipeline at this time. And just every time they report, that thing gets bigger and bigger and bigger. So it's all lining up nicely.
So that's a great sort of summary of the bull case and your thesis. So let's turn to the bear case, or I guess red flags that you'd be looking out for as this company aggressively grows and expands. And one thing we were thinking about before the break was around how they keep up with militaries changing their drones and to effectively make the Droneshield products useless or redundant. So I don't know if you have the inside word on their engineering team, but what does your bear case look like?
I mean, this is the story of war, right? There's a literal arms race, and sort of someone develops a technology and someone sort of has another one that sort of counteracts that, and then sort of, so on and so forth. The nature of the tech is really using high energy EM pulses. So the drones that's how they communicate back to their controller, etc. And there's a lot of electronics, obviously, on the thing. And there's you kind of get into the realm of just hard physics, where it is very difficult to shield these drones from any kind of EM attack. Not impossible, but it sort of changes the whole dynamic.
EM attack is not Bryce and I doing an equity mates attack. EM is electromagnetic attack.
Let's hope that never makes it to the battlefield. I feel sorry for the enemy if that happens. So look, I don't get out of my wheelhouse too much, but I don't. Look, you can never say that the technology will never be disrupted, but I think that they're in a pretty good place with that. Here's my bear case, and this is something I've seen quite a bit of. where a company, the phrase is they grow themselves broke. And sometimes the worst thing that can happen to a company is have a lot of early success. Now, how is that possible? Well, you get this big early success, you get a big order and you go, wow, this is fantastic. Oh, we need to grow. We need more manufacturing capacity. We need more salespeople on the ground. We need more operational staff, et cetera, et cetera. Hey, we really should have a presence in the European area and we should probably have an office over in Singapore and this and that. And all of a sudden you spend huge amounts of money in anticipation for sales that never come. And so the companies get over their skis. They bulk up. Actually, we've seen quite a bit of this, not so much in this particular sector, but in the tech sector more broadly in recent years. Look at how many companies have gone from we're shooting for the moon in terms of our revenue growth. And now it's all about, no, we just need cash flow positivity and we're cutting staff and we're downsizing and we're doing cost saving initiatives and that. They're suffering the consequence of over exuberance there. So here you've got Droneshield that just, by the way, they already had a very healthy balance sheet and because the share price was so high, they decided to raise, I think 70 million through an institutional raise and offering existing shareholders 5 million more. It turned out it was so oversubscribed, they scaled it up to 100 million with the instos and I was at 15 million with the share purchase plan. And so they have got this massive mountain of cash, which is, by the way, this is good. It's a good problem to have. The balance sheet is like a fortress. But if they do not spend that money well, if they, I don't know what the language warning is on this, but if they weird up against the wall on a lot of bad R&D and they decide to get a really fancy office somewhere, it's easy for things to have the veneer of success, but not the kind of success that a rational, objective shareholder would like to see, which is I want you to deliver as much as you can into my pocket, or at least the potential for it to go into my pocket, not so you can have thicker rug in the boardroom and more expensive art on the walls, just to take an extreme example. So I think for me, that's what I want to see now. Now that you've got the traction, now that you've got the support of a lot of investors and the market, now that you've got this massive balance sheet and this huge cash pile, that they just run too far, too hard, and they invest very poorly, that can very much undo a company. And that's mainly what I'm watching at this point.
Yeah, it's a fascinating company, and it's one I think we'll all be watching closely. We want to close with long term and how you think about it long term. Like if this company is able to execute, if it can do what it says it's going to do, if it spends that $100 million well, what does Droneshield look like in 5 or 10 years?
Yeah, excellent question. So companies like to put out long-term sort of aspirational goals. You've got to take them with a pinch of salt, right? But for whatever, for better or worse, these guys have a target at FY28 of 300 to 500 million in revenues. Now, they did, as you said, 55 million in revenue last year. So it's almost a 10x that's there.
Wow.
And you need to do a bit of guesswork here, a bit of thumb sucking, but I don't think it's unreasonable that at a bit more scale, they get a 10% net margin off that. They're already doing, you strip away some of the R&D grants, et cetera, they're already doing 5 to 6% in margin. So you get, it's not hard to see these guys generating 30, 40, 50 million dollars in net profit in only 4 years' time. The PE, despite the share price rising to the moon, the PE is quote unquote only 44 or so for a company that's grown. Like again, the most recent quarter was 10x in terms of revenues, and it is profitable and internally funded. And then the enterprise value, if you strip away the cash component, is even more attractive. I think you've got a situation here where it's sort of like you can do yourself a disservice by buying a great company, but by well overpaying for it. I don't think you need to squint too hard at the numbers to actually get a sense of this being a company that is legitimately $1 billion company, in 5 to 10 years, say, and one that is operating at scale with decent margins. I did a valuation recently, about 3 weeks ago on Strawman. And high growth companies, you get a very wide range of outcomes. But even with some conservative numbers, I kind of thought, look, around about $1 seems about fair value given the trajectory they're on and given what they're likely, or what they at least potentially can do. So where are they longer term? Well, they're much more tightly integrated in with their end customers. potentially we're going into a worse world in terms of geopolitical conflicts. There's very strong tailwinds there. Drones are an increasing threat outside of the military arena as well. And they've got the established presence. They've got the proven technology. They've got the referenceability of existing customers. I mean, you can imagine if you're in the market for a drone and you're looking around and then Droneshield rocks up and goes, oh yeah, we provide technology to the US military. It stands you apart, right? So there is very good potential here. If this thing shot to $2 tomorrow, I'd probably sell my shares, to be honest with you, because it kind of gets to a point where it's priced for perfection. But at this point, and given the potential, I think it can actually deliver on things. Now, I've got to be careful because this is a podcast and this will be on the internet forever. And, you could listen to this in 5 years. I'm going to sandbag a little bit here as well, which you got to do, right? I think as an investor is like, I think when you write out and hopefully people are trying to write out their investment thesis, write out what would force you to change your mind or to reevaluate or to sell. And we sort of touched on some of the things that could go wrong there. So the potential to answer your question, Bryce, is that yes, it could be a much, much more successful company. If we're not starting to see some of these things, live up to that potential, I think that you would need to reevaluate the situation and be prepared to get out. But yeah, at this point in time, I think there is still good upside. Just understand that because there is a lot of quote unquote hot money that's in there, this thing is going to be super volatile. And generally what happens is it just shakes people out. So no one notices it. They're at the pub with their mate. He goes, oh, I bought this thing. It's all about drones. It's super sexy. It was 40 cents at the start of the year. Now it's $1 and you pile on in. 2 weeks later, 20% loss at 80 cents. And you go, stuff this, I'm out. And that kind of serves you right, frankly, for just aping in on a share price bump. But that's going to be normal, right? I think that is going to be, this is the kind of business that could easily drop to 60 cents, 50 cents. Everyone's an enthusiastic shareholder when they're sitting on a profit and the share price is going up. But I'm saying to you that even if they do deliver genuine success through any objective measure on a business front, you are still going to see a very choppy sort of share price. And if you're buying this because you think, wow, in the year 2030, this is $1 billion company with all of the things that we were sort of saying is possible, great. But it's not a straight line between there and now. And it's just, you can never overemphasize that point enough because too many people get shaken out. Or the other thing, which is even more frustrating, is they go, great, they buy it at 80 cents, it gets to $1.20, they think they're a genius and they sell out. Now that's a great profit to have, but if this is $8 a share in 6-7 years, you'll really kick yourself and regret it for that. So stay grounded on what the business is doing and make sure that is tethered to the share price in a sensible and reasonable way. You don't want to overthink it too much, and just continually reevaluate things every time there's an announcement, every time there is a new set of results. Are things on track? Does this make sense? Do I need to tweak any of my assumptions? As long as the company continues to broadly deliver in line with your expectations and things don't get too out of whack on a valuation front, sit on your hands and don't do a damn thing. Because, it's like Ben Graham said that, the investor's chief problem is most often himself.
Love it. Well, the stock is up 134% at the time of recording year to date, but within the last 5 months, there's been a drawback of 35% and 25%. Yep. So exactly what you're talking about there.
Perfectly
Andrew.
Normal.
That does bring us to the end of our podcast today. Thank you so much for joining us. As always, left us a lot to think about with Droneshield. Certainly, as Ren said, a company of the moment. Will this story continue to play out healthily, I guess, over the next 10 years or so? We're looking forward to keeping an eye on this one. But Andrew, a pleasure as always. Good luck to defend your title for Guest of the Year 2023. And we'll make sure we get that trophy to you as soon as we can.
Thanks so much, guys. Like if this thing is like 20 cents at the end of the year, I think that's going to be a hard title to hang on to. But I'll be crossing my fingers.
So before we wrap today's episode, a massive thanks to our friends at Superhero for supporting this series. Trusted by us and 300,000 customers and winner of Money Mag's Best Value Share Trading Platform 3 years in a row, Superhero offers you a range of features and investment options no matter where you are on your journey.
Get invested. Trade for $2 with Superhero.
$2 brokerage is for trades up to $20,000 and in the relevant currency. T's and C's do apply, and you can read them or download the Superhero app at superhero.com.au.
Now, Equity Mates, join us next Monday for our next episode of this winter series where we take a deep dive on the ever controversial Tesla.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.